You gotta love it, guys. You gotta love it. Just when you thought we're getting to the end of the tunnel, the light's at the end of the tunnel, stocks have been doing well, inflation's starting to come down, we got some bad news from JP Morgan. They're saying that they could see the stock market test the lows from 2022. You heard that right, guys. You heard that right. So we're going to break that down in this video, and of course, we're going to talk about the stock market. We're going to break down charts, what I'm looking to do. So if y'all find value, smash that like button, make sure to subscribe. And if you guys haven't gotten up to 15 stocks yet from Moo, what are you waiting for? Use that link down below. We'll talk more about that later. And now let's dive into it. So you guys probably know that the stock market's been doing pretty well throughout the course of 2023, especially compared to how it did in 2022. It was a rough year, guys. It was definitely a year for the history books. You guys can see SPY started off this year at about $380 per share, roughly, right? These are rough numbers. We're not gonna include dividends or anything like that. SPY went from 380, and currently when I'm making this video on the 4th of April, by the way, guys, this weather just keeps on getting better, man. Today in New Jersey, it's gonna be like 80 degrees, which is unheard of. Just a week or two ago, it was in the 40s. So talk about craziness. Either way, guys, here in April, right now, it's $410 per share, and to start the year, it was at $380. So in other words, not including dividends, it is up about 8-9% throughout the course of this year. And get this, guys, Triple Q in that same time period, it is up a whopping, let me show you guys this, from 262 to about 320, it is up over 20%. You heard that right. It is up over 20% from the beginning of this year, beginning of January, to where it is right now. That is insane. And it makes sense that we're seeing a sharp spike back right now, considering inflation's been coming down, rate hikes are starting to slow down. All right, that makes sense. And we're coming off of an awful year of 2022, which you guys probably remember. The markets did not do well in 2022. Triple Q was at $408 roughly to start off 2022, and it got all the way down to $250. In other words, it was down 40% at its worst, right? And SPY, let's take a look at that. This ended up going from $480 to start off 2022, and at its worst, it got to $350 per share. That was a drop of 27%. So we're starting to, rebound. That's what we're seeing right now. But again, JP Morgan is saying, hold on, pump the brakes. Stocks might be going back to the lows from 2022, which I believe the lows, let me see again. I just said it. I forget now. What was the low? 350 on SPY, and Triple Q was right around, where was it at the low? 250. So they're implying, JP Morgan saying, look, Triple Q might be going down another 20-25%. It might erase all the losses from this year thus far, right? They're saying SPY might go back down to 350. It might go down 13-14% to take out that low from 2022. So let's dive into this and go over, we're not going to go over the actual, report. It's too long, but we'll break down kind of a condensed version here on Yahoo Finance. Shout out to Yahoo Finance, guys. Let's dive into this. Bear with me, guys, and we'll talk. So at the top here, guys, you can see a risk-on mood fueling this year's equities rally is likely to falter with headwinds from bank turbulence, which you guys know what's going on with the banks, an oil shock recently where we got news that OPEC is cutting production by, I think, 1.16 million barrels per day, and slowing growth poised to send stocks back towards their 2022 lows, according to JP Morgan strategist Marko Kolanovic, which we're going to talk a little bit about more what Mr. Kolanovic is talking about here, right? So look, the Fed indicated no intention to cut interest rates this year, you guys can see, yet risk assets are exhibiting an unprecedented rally, with European stocks trading near all-time highs, U.S. stocks reversing recent losses, which they are. You can see they've recovered a lot of that 2022 loss, and Kolanovic and JP Morgan said they expect a reversal in risk sentiment and the market retesting last year's lows over the coming months, which is really, really worrisome, guys. In other words, if this is correct, if Marco and, JP Morgan, they're right, now would be a wise time to lock in some profits. Now would be a wise time to take some money off the table. That's if you're a short-term trader. Maybe you're mid to short-term, right? Short to mid, whatever. Of course, if you're a long-term investor, who gives a crap, right? In fact, I just bought more S&P 500 today. VOO, guys. I literally averaged more today in my retirement account. I could care less for the long term, but for the short term here, he might have a point. JP Morgan might have a point because, once we got word that the Fed was not looking to cut rates this year, you guys remember during the FOMC press conference, stocks ended up nosediving after that. And then since they recovered in the days to come after that. But still, Wall Street, stocks, the markets, right? They were expecting maybe a cut, and now that's off the table. That ended up shifting the markets down momentarily, but again, they've rebounded since. And who knows? Maybe we do have some more work on the downside. And in his view, Marco's view, the inflows into stocks over the past few weeks make little sense, and we're largely driven by systematic investors, a short squeeze, and a decline in the VIX, which is also known as the CBOE Volatility Index, which you guys know the VIX now is at what? 18, 19, it's very, very low at this point in time. And a drop in the VIX below 20, a level associated with stressful periods, suggests investors believe the banking crisis is contained in the near term, which, like I've said time and time again here on the channel, guys, at any moment, at any day, any minute, we could get a piece of news from another bank going under, or maybe some more news around Silicon Valley, this bank, this bank, right? That could send the markets down, or at least spike the VIX up, which would cause a lot more panic overall in the stock market. And Kalanovich says he characterizes the present market backdrop as the calm before the storm. So he's very bearish, guys. JP Morgan seems to be very bearish at this point in time. And the wild thing is, Mr. Kalanovich was the biggest optimist, one of the biggest optimists on Wall Street through most of the market sell-off last year. And since that point, clearly he's reversed his view, cutting his equity allocation in mid-December, January, and March due to a soft economic outlook this year. And of course, guys, who knows what's going to happen? We could see, all-time highs this year for all we know. But this is coming from JP Morgan and Kalanovich's point of view, right? So keep that in mind. And check this out, guys. Kalanovich also said it is worth noting the accordion-like nature of risk sentiment, where restrictive rates produce an issue for various carry trades, and the ensuing pullback in yields mitigated some of the stress. Although central banks are still communicating, there is ground to cover on fighting inflation and pushing back against the market's assumption of cuts. So the original source of stress, rates higher for longer, can re-enter the picture. And again, now that OPEC is cutting production of oil starting to go up, it's likely to have some upwards pressure on the headline number for inflation. You got to realize that we might have a big pop in inflation, maybe not a big pop, but something that could spook the markets and maybe, again, have more fear re-enter the market in terms of, oh my God, maybe higher rate hikes are coming. Maybe cuts now are going to be pushed farther down the road. And of course, if we get a major rate cut at some point in 2023, which we're not, but let's say in 2024, that's going to be good for the stock market, right? Obviously. But if that gets pushed down the road farther and farther and farther, the markets are not going to like that. So essentially, guys, that's what's going on right now with Mr. Kalanovich and JP Morgan. They're not the most bullish right now on Wall Street. Let's just say that. They're obviously bearish, and they think stocks are going to go a lot lower. What do you guys think? Let me know your thoughts down below in the comments. And in my opinion, guys, at this point, we all know the Fed is data dependent. So we're going to have to see how this, spike in oil, how that's going to affect inflation moving forward. Of course, now that we're heading into the travel months of summer, if you will, where there's going to be more demand for oil, and there's obviously going to be less supply. So it's simple supply, demand, simple economics at this point, right? So in my opinion, do I see the stock market testing the lows? I'm not going to lie, I don't see it personally. I don't see it testing the lows, at least in the short term. I mean, who knows what happens in a year, 2 years from now? I mean, if we're in a depression, if the banking system collapses, all right, fine. We're going to test the lows at that point. But the way things are looking like right now, inflation has come down a little bit, although it is sticky inflation. It has come down a good amount. We're talking 300 basis points, 350 basis points, whatever it's come down. So as long as that remains on the decline, as long as we're seeing disinflation, I can't see us testing the lows unless the Fed decides to go crazy and notch up the rates more than expected, again, if we get inflation creeping back up in a couple months, which again, I don't really see that necessarily happening, and the Fed just going full on crazy mode with the rates. I don't see it happening, but I could be wrong. Who knows? And either way, guys, I'm still investing. You guys know I'm buying, I'm holding for the long term. And again, I just bought more VOO today, the S&P 500 ETF. I bought more today. So that should tell you that I'm still in this. I'm still buying and I'm holding on. Now for the short-term trades, I'm being cautious, of course, guys. I'm being nimble. I'm being pretty conservative on the short-term side of things, but long-term, I'm still buying. I'm young, guys, at this point, and I have a long time horizon, and if you're in that same boat, you should not be worried, at least in my opinion. Now, if you're retiring next year, all right, maybe that's a little bit different. If you're retiring in 5 years, maybe a little bit different, but if you're retiring in 30 years, 25 years, 40 years, don't worry about this. You should be fine. You really should be fine. So what do you guys think? Let me know your thoughts down below in the comments. And don't forget to get up to 15 stocks from Moomoo. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more free shares, totaling 5 stocks. And if you deposit at least $1,000, guys, listen to this, you get another 10 stocks, totaling 15 free stocks. So if you want some free money, you want to help out the channel, use that link down below, and I'll catch you guys in the next video.